Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. It is July 8th, 2020. This is episode number 83. And of course, if you want to join our free stock alerts list, it's easy to do. Just go to www.dallastradingfloor.com and just sign up, and you will be receiving the stock alerts as I create them. So there's a lot of good trading ideas, but generally they're very timely. So you need to get in the queue, and hopefully you will you'll subscribe to the trading alerts so that you will be part of the club. Anyways, it is interesting. It started out strong today, but it looks like it's moving back towards. It's kind of choppy right now. So, who knows? I mean, who knows where it's going to go in this, in this market? You just can't figure it out. We seem to be retreating a little bit, and I kind of wanted to show you that on the slides. When this slide was taken, the market direction was definitely up. And the NASDAQ, again, it's above 10,000. That's really important because it's showing a confirmed market uptrend. So you want to be careful in a market like this not to short anything, because this market is continuing up. Both the S&P 500, the Dow Jones, and the NASDAQ are up. The NASDAQ volume is down a little bit, but the direction is upward. But it is choppy right now. It seems like there's some consolidation going on. Who knows? After yesterday, which is a sell-off, I think we're seeing some strength. But again, it's a confirmed uptrend, but it's a little bit under pressure. Here's the weekly chart of the S&P 500 ETF. This is the largest ETF in the world. It's called the Spider. It's worth about $220 billion. Many people's retirement funds are in here. And basically, this tracks the S&P 500. And so it has moved up again at 318.38. It seems as if we are getting some support at about the 300 to 305 level, and that just seems to be consistent. The volume's down a little bit today, but it's still pretty healthy, up just to 60 cents. Not a whole lot, but we are continuing this uptrend. As you can see, this great big drawdown here, this has happened when the market reversed, and the bottom here is when the Spider hit 218, and that was on March 23rd. That was the bottom of the market. We have not yet retested that, and some people think that we may be retesting that shortly, but at least for right now, we don't want to be short because the direction is currently up. Here is a look at the QQQ. This is a very interesting ETF as well. It's very large. It covers the NASDAQ 100 stocks. Basically, all of the stocks in the NASDAQ are in the QQQ trust. It is up again today as well, $1.80 or about 0.7% at 258.41. Again, it is a little bit, as you can see, it's a little bit more pronounced upward motion relative to the S&P. The QQQ has been leading this market uptick as we come into the reopening. So most of my stock picks are going to be typically in the QQQ, and they might be in the S&P 500 as well, but I am concentrating on two sectors of the market for seeing the best leaders. That, of course, is tech, and the other one is healthcare. Those are two of the most active sectors in the market. I typically am avoiding other sectors of the market, with the exception of Tesla, which is in the automotive sector. Now, I also want to show you the chart for the Dow Jones ETF. This is called the Diamond, and it's also a very important chart because it covers the largest industrial companies, but there's only about 30 companies that is in this particular index. So there's only 30 companies, of which Boeing is the largest component. It is not done nearly as well. It is up today at 259, but you can see relative to the last chart that I showed you, the QQQ, the Dow Jones 30 or the Dow Jones is struggling. And of course, this ETF is symbol DIA. It covers the 30 stocks in the Dow Jones. But I wouldn't recommend stocks in this category because they have been definitely lagging the market. And I don't think it's going to provide you with the kind of action that you probably want as well. So here we go. I'm going to show you two stocks right now that are in the top sector. The top sector, of course, being tech. But the thing is, what tech? There's a lot of tech. I mean, there's Microsoft and there's Amazon, and that's great if you have, $2,700 to $3,000 for a share of Amazon. That's a great thing. But I'm trying to focus on where are the potential leaders coming from. And here's what I have come up with. There's two stocks on this list that I think are very interesting. They both have a 99 out of 99 composite rating. This is absolutely the very best composite rating. Now, this list that I'm showing you here, and by the way, if you're looking on TikTok, I have this chart up on YouTube. It's youtube.com/Dallas Trading Floor, or on Periscope, pscp.tv/Dallas Trading Floor. And I'm also on Twitch at twitch.tv/Dallas Trading Floor. But anyways, taking a look at this this list, these are all a perfect 99 out of 99 composite rating. And some of the companies that you've heard of, like Zoom Video, everybody knows that. It's moved extremely nicely. It's up 3.25 today alone, and about 1%, but it is down a little bit in volume. Another one that I have recommended in my shows several times, and I still think remains a extremely potentially good stock, and that is DocuSign. But again, it is not quite in the right pattern right now. It's moved above the buy range there. Also, Coupa Software, excellent too. It's up 4.82%, which is tremendous. Down a little bit on the volume, but excellent as well. The two ones I want, and of course, NVIDIA. I've owned the stock back and forth several times, buying and selling it. It's just tremendous. You can't really stop NVIDIA. I think NVIDIA, the next stop for NVIDIA probably is $500, but again, it's just been a tremendous stock. This has been on my recommend list since it was $280, and that was basically back in February. So this one has just done extremely well. The volume's a little bit down today, but just a tremendous stock. Part of the reason NVIDIA is so great is because many of the cloud kings are having to install infrastructure to beef up their cloud offerings, and NVIDIA is definitely in that category. There is some competition coming, but at least in the AI space and some of the big cloud-based facilities operators like Facebook, Amazon, and Microsoft, they are buying a tremendous number of NVIDIA products. So that's got a very, very good outlook. But the two I want to talk to you about is very interesting. One is a automotive AI stock, symbol SRNC. And the other one is another tech stock called Dynatrace, but I want to show you this first one here as well. So let's take a look at the chart really quickly on that. This is the self-driving stock that I think might be a tremendous play, because right now, even though it's down a little bit on this chart, it is number one in the category, and it's got a perfect 99 out of 99. It is a relatively new stock, so it's a little bit dicey when you buy an IPO like this. It's only really been out for about 2 months, and it's going into the third month. You should really wait on this one. This is why I'm trying to say this is a potential watch list for everybody out there. And I think this will possibly be an excellent stock. The chart pattern is excellent, as you can see here on the chart pattern. Again, it is an IPO stock. It's got a perfect 99. It's being heavily accumulated. And why is that? Well, because other companies besides Tesla are going to have self-driving, and this is kind of the software that's going to make that happen, hopefully. And so many companies are going to have to acquire the software, kind of like when the iPhone came out. The Android was iPhone for everybody else, and that is the case with this company. So at $40.36, I think it's definitely a watch list stock. I wouldn't buy it until it has passed 3 months. That's typically, you want to see at 3 months, you want to make sure that it stabilizes a little bit. It's getting known out in the industry. It's not totally out there, but it has an excellent accumulation of funds that are accumulating this. And they have to, folks, because many of the, Tesla probably is going to go into the S&P 500 this next go round, and there's just going to be it's going to pull with it a lot of software companies, a lot of components that are related to self-driving and electric vehicles, and this is one of them. So CRNC is definitely a watch list, I think, for you. The next one I want to show you really quickly here is a automation software company. Now what this does is that this automates software processes. So this is also a very, very hot area. This is a company called Dynatrace. It is currently selling for $42.08, and basically, unfortunately it's a little bit past its buy range. The buy range, and you can see it here, again, this is a relatively new stock. It's only been out about 3 months, but basically the minute that it passed the 3-month threshold, pretty much it was a buy rating. The extended range is from 37.16 up to 39.01. It's currently trading at 42, so it's just slightly extended from that buy range. But it is excellent stock because it is in a very, very hot area, and it's being accumulated as well. This box down here shows you kind of where it stands. The top stock in this particular category is Audio Codes, and then Coupa Software, which is also on the list that we showed you. And then coming in at number 4, you have DT, which I think is definitely worthy of a Dynatrace, which is worthy of inclusion on any buy list. But I'd watch list this stock. I would see if it might, if it moved down a little bit to right at about 39. I think I'd probably be a buyer at about 39. Currently, I'm not in the stock, but you know, that may change depending on how the chart action goes. I have a feeling that this is going to do quite well, and it's definitely a watch list stock. So that's DT. The next thing I want to show you is my portfolio. I did get called out of a position today. I couldn't believe it. I got called out of position, but this is my current positions. I only have 7 positions. I typically don't like to trade any more than about 8 positions. My largest holding is Tesla currently. It is down a little bit today, but it's up overall very significantly. I'm also, my next most significant position is Netflix. It's just moved above 500, but it's probably backed off a little bit by the time you see this broadcast because it's been flirting with that $500 level. Now, I'm also in Viva Systems. These Viva Systems supplies about 85% of all the pharmaceutical companies in the world for the drug discovery process. It's a cloud-based regulatory and drug discovery platform, and it's a very powerful stock. Viva Systems is up $4.70 today, or about 1.9%. It's off a little bit on volume. Also, I have Vertex Pharmaceuticals. Again, this is following my general theme, and this is the theme of the market because I'm just following along. I'm like a little minnow that's following along amongst the whales. I'm in tech and I'm in healthcare, and that's about it because those have typically the best of the best of the fundamentals. Now, there is one stock on here that I would like to show you. It's a very unusual stock. It's much more speculative. It doesn't meet my normal criteria for inclusion in my portfolio. Typically, that's got to have it better than 80 on the composite rating. This one only has a 70. It's called Blink Charging. But I think it's an area that you might want to look at. It's been quite strong. It's based in Florida, and what it is it's a network of charging stations for electric cars. I think that the electric car market and the electric car charging market has some legs here. Now, here the problem is, of course, I think you know there's only a number 1 company, and that's Tesla, and then everybody else is about a number 7 on the list. A lot of other companies really can't compete yet with Tesla, but the charging networks are going to be big. It is up today at 767. I was in at 640 on this one. So that just kind of gives you an overview of sort of where my holdings are currently. And I want to show you just another thing here. This is a piece on Tesla, and by the way, this is available in my slide set, which if you want to get the slide set, there's a link on that when the video for the YouTube comes out, you'll have a link that goes right to the slide set, so you can have the slide set and take a look at it, and it'll provide a link to you. Tesla, it's a 98 out of 99, which is pretty amazing. It's up a little bit today at $4.82, at right about that $1,400 level. But the interesting thing about this rally is that there's a lot of other sympathy trades. Now, I'd be careful on the sympathy trades. I know that Nikola has come up, but they haven't delivered any vehicles, so you might want to be careful there. I think Nikola might be a trading stock, but I wouldn't hold it long term because I don't think they'll be able to compete. But if you want to make some quick profit, you might want to look at that one as well. And of course, there's the legacy companies that unfortunately have not done nearly as well as the other ones. GM is down, Ford is down, and of course Fiat Chrysler is down as well. It's amazing. Now Tesla is worth more money, believe it or not, than General Motors, Toyota, Ford, and Chrysler put together. So it's kind of amazing, and that's just happened very, very quickly on this. So that kind of gives an update on the situation with Tesla, which I think is a very interesting place to go on the market. So without any more ado, I want to get to your questions. All right. Let's see. Live viewer comment. This is an example. So that looks like so you know that I'm using StreamYard. Are you still in ZYXI? Good question. I am not. I wish I was. I got stopped out of this. And remember, I always follow the rule. I always put a 7% stop loss. Well, I was stopped out today. It went down and it was at 25.24, I believe, is where I was stopped out. Unfortunately, I'm stopped out of the stock. This is what I do. I put the stop loss on, and if I get stopped out, I'm out. So I'm out, unfortunately, and that happened about 11 o'clock today. There was a little bit of dip. So typically, I will never take more than about a 7 or 8% loss. And this is something that you should consider doing yourself, because this is a very good discipline if you set stop losses and then just let them go, because this will prevent you from having very bad losses. But this one did get stopped out today, so I'll be very upfront about that. Jim's thought on his tech bustle. These stocks are soaring past pre-corona prices. Feels too good to be true. I agree with you. I do think that tech is super important in the market. It's super duper important in the market, but it's not everything. It's definitely not everything. That's why I would be looking possibly to do, to take part of your money that you've made in tech, sell the ones, the non-leaders in tech, and then take a little bit of that and move it into healthcare. That seems to be the defensive play. A lot of people, when this thing were going on, were saying, oh, it's the value play. Go and buy the airlines. Well, they're doing terrible. Or go buy the cruise lines. They're not doing so hot either. Go buy those, or go buy Boeing. It's a great company, right? Well, it's been okay, but not great. So the only other sector besides tech that I'm in currently is healthcare. And why? Because that is the defensive sector, and that's why some of my suggestions are based on that healthcare spend, which is important. Vertex Pharmaceutical, I'm in that. It's done quite well, and there's some other ones. Teladoc, for instance, I had an alert on Teladoc. Teladoc has done phenomenally well. It moved up too quickly for me. I had sold a call option on it. I had to buy it back because Teladoc was moving up too quickly. And that sometimes happens, sometimes the market gets ahead of itself. But I do believe the market is getting a little bit rich. And here's the thing with a market like this. If you have seen 20% or better increase in your shares in less than in 8 weeks or more, then you possibly want to sell some of your position. Now, if you bought something and it went up 20% and it's less than 8 weeks, hold on to it because it's probably going to go higher. That was the case with Tesla. The thing about it is you want to possibly start taking off some of the risk if you've got some long-term winners now, because I do think we are possibly going to have a readjustment as the opening happens, and many of the things become more real in the economy. Reason I'm saying this is that, you're starting to see the furlough notices go out there. Companies are saying, hey, we're going to furlough so many people. This is happening in the airlines right now. So if you do have gains, be careful, because we may be in a readjustment period coming up here. We're not there yet. We're still in the confirmed uptrend, but be careful. If you've got some gains, you want to lock them in. The best way is to go to cash. Also, another thing, indication of this is the price of gold. The price of gold is pushing up against the 1880 threshold. The 1880 threshold is a very important level for gold, because that is where the resistance is. If it goes beyond 1880, then we're going to be making new highs in gold, and there's a fear of inflation. So, we may be doing that. But there's always, like everything in the market, there's always good plays to have, and there's several good gold mining stocks. KL being at the top of the list, one of my favorites, or Franklin, Nevada, FNV. But there's also some other great ones out there as well. Let's see. Okay. Do you think about the stock exchange? What do you think about the stock exchange up too much? Well, I think it's getting very frothy. But you know what? There's an awful lot of loose cash around because of all this. Because of all this easing. Here's what's happening, and why is the market going up? Well, I think the reason, one of my explanations, is that there's so much money that was in the bond market. You see, the bond market is 10 times the size as for the equity market. The rates that they're getting in the bond market are absolutely nothing. Government bonds are paying literally nothing. So, what do you do if you've got cash to invest? Well, you're going to have to go into the stock market. And here's the thing. I mean, this is part of the reason why, stocks like Tesla keep going up. This is the reason why stocks like Microsoft are so heavily subscribed. I mean, you look at the PE ratios and you go, wow, that's terrible. But, there's in this market, there's not a whole lot of places you can get a return. So what's happening is you've got all of this money flooding in, seeking return. Now, does that indicate a bubble? Yes, a little bit. So we've got to be careful. This is the reason why, whenever you buy a stock, please put a stop loss on it and just set it and forget it. That's what happened to me today with ZYNX, Zynex. It absolutely did. Okay, so I'm sorry, I took it the wrong way. Let me look at SE for you really quickly, and we'll bring that right up. Hold on. So I'm going to go over here and look at SE and see if I can bring up a chart for you on that. Okay, hold on. There we go. This is okay. Wow, it's really up. I don't know. This is interesting. I don't know what to say on this one, but it's definitely an interesting stock. So here we go. Basically, very nice chart pattern. Let's always look at the weekly chart pattern to look at trend, because there's a little bit too much noise in the other pattern. It's staying very nicely above the 40-day moving average. I don't know why. This is a Singapore-based company. Oh, okay. Internet platform. Okay. E-commerce. Here it's got a 90 rating. This one looks good. Wow, it's really strong. Up 11.13. I think this is probably getting some of the fallout from Hong Kong. I think a lot of capital will flee from the Hong Kong market. We don't know, but Singapore would definitely be a safe harbor. SE, it is an internet content group. It's good, but it is not great. The number one rank, let's look at the internet contact group. The number one rank is this Chinese company, which has also got a 99 rating. Now, here's the thing about this. Chinese companies, you have to be a little bit careful about them because of situations like happened with Luckin Coffee, LK, where the books were fraudulent. I'm not saying that's the case here, but take with a grain of salt the financials from some of the Chinese-based companies, because they literally do not use the same gap as with other companies. So let me see if I can get another good question. Wow, we've gotten a lot of interest on TikTok. Now, here's the thing, TikTok people, I love TikTok, but it looks like, we may, the federal government may shut down TikTok. I don't know. I'm not in the know on that. I'm not a political guy. Um, they did in India. So here's the thing. If you can, take a look at my profile. If you're on TikTok right now, hit on the link button and subscribe, and I'll make sure that you get everything that I'm going to be broadcasting to TikTok. Also, I'm broadcasting live every day, and this is just, and it's all archived there in case you don't have time or you just want to skip through and look at some of the parts of it. It's on youtube.com/Dallas Trading Floor, and this is Dallas Trading Floor number 83. So, if you want to see the charts and my lists that I have, and I present them every day. So we have a question for AZN. So let me see if I can pull up AZN and take a look at that really quickly. AZN, and I don't know that symbol offhand either. So, oh yeah, okay, AstraZeneca. Okay, I apologize. I know this company very well. I just didn't really recognize the chart symbol. So that's shame on me for not recognizing the chart symbol. AstraZeneca is one of the great big pharma companies. There is going to be, I think all pharma companies are worth a look right now, based on the fact that that is going to be the safety trade for a lot of funds. They're moving money into the pharma section. I also would, if you're going to be buying pharma, I also look at Bristol Myers Squibb and Lilly. Those two have excellent chart patterns, but this is a very good chart pattern. This is the weekly chart, moving up nicely. It's above, it's hanging right on the 40-day moving average. So I can't say, I mean, I don't know if this is the most stellar one, but and it's got an 88. Yeah, so this is good. Again, AstraZeneca is number 2. My pick, of course, would be Eli Lilly. I just indicated that just a second ago. So let's look at the Lilly chart. Yeah, that's a 99. It's a lot more expensive stock, but AstraZeneca, it's very good. I think that I think you have a winner if you're in it, and I do think it's going to move straight. I wouldn't have any qualms on buying AstraZeneca. I think it's an excellent chart as well. So let's see. We have another one here, SHIL, and thank you so much for coming in and looking at me on YouTube. I think that's great. I'm trying to get more YouTube. So by the way, Cherble, if you could, please like me and subscribe if you can on YouTube. I'd really appreciate it. That would be a great thing. SHLL. So let's take a look quickly at that chart here as well. So it's coming up as it comes up. There we go. Okay, this is a blind pool. We've had a number of questions through about this one. Here's the problem. Here's what I don't like about blind pools. It is number 1 ranked. The problem with the blind pool, and that's what this is that I don't know what is in it currently. I mean, the chart doesn't look horrible. I mean, it's come up and then it had a blow off top, and it's still at 98% relative strength. That's excellent. The thing about here is the question is, what are they going to be investing in? We don't know. I mean, it could be an absolute winner in the electrical vehicle space, or it could be a pharma. We just don't know. I just typically don't like to place money in a blind pool because I just don't know what they're considering investing in. But the chart looks good, and in terms of this group, it's excellent. This is not really a investment, though. It's essentially a holding pattern. So let's take a look at it. It's got an industry ranking of 49, which is excellent. By the way, there's 197 of these sectors. Here's the thing, and it looks like they pooled up $755 billion. That's a significant chunk of change that they're doing. But again, we don't know what they're going to be investing in. When I get more information on that, I can say, if I'd be an investor in it. I currently would not be an investor in this just because I have no idea what they're buying, at least for right now. So that's kind of where I am on that. So next question from TikTok: what happened to Tesla? I'm scared. Well, here's the thing about Tesla. Tesla is going to move in a range. I mean, it was moving up really, really quickly, and now it's backed off a little bit. Okay, well, that happens. The range on Tesla is larger than on most stocks, but I think it's far from ended. here. The thing about Tesla is, you know, you got to have a little bit of faith. Oh, well, it's down 22, but you know, it's still in the $1,300 range. So I'm not too worried about Tesla. It did close a lot lower today at 1367. So let me pull that up on the screen. It's just a little bit of pullback. I mean, the thing about Tesla is that, you know, stocks just don't typically go up in a straight line. Sometimes there is a bit of a pullback. It looks like there is a little bit of resistance right there at $1,400 a share, which is not surprising at all because there were a lot of options at that level. So yeah, I'm not surprised that it's at that level, but again, not necessarily. It's not time to ring the alarm bell yet on Tesla by a long shot. So it just seems to have gotten rid of a little bit of gas, and there you go. All right, so okay, ONEM. So let's look at ONEM here really quick. ONEM. Yeah, there we go. Thanks, June. Appreciate it. Life healthcare. Okay, it's in the healthcare sector. 59. Not the best chart. It definitely going in the right direction, as you can see. It definitely had a blow off, and then it came down, but it's moving in the right direction as well. But it still hasn't recovered. You know, here's the thing: Humana is the number one in the category. At a 59, I probably would not be in the stock, but it is up today. So you know, at $38, it's probably not that bad. I just don't know. I don't follow this one. I follow Humana, and let's take a look at Humana because you know that one is worth owning. It's going to be expensive though. The problem with the the quality is $386 at a 97. You know, if I was going to be in the healthcare space, you want to go with the leaders because they're the ones that are probably going to do better. And Humana would be it's better to buy fewer of Humana than more of Life. But not to say that it's bad. It's just I would not. I would do it that way. Anyways, so I have a question about shorting the market. It is not time to short. Here's the thing. Let me just kind of bring it this way. This is a really important thing, Donald, about the market. Now, I made quite a bit of money shorting the market in March, but the reason I was shorting the market very simply was because the overall direction of the market was lower. Currently, we are in a confirmed uptrend. I know it doesn't seem like it, but we are. And so right now, it's a little bit dangerous to short. Now, if that direction changes, then we probably want to move. We want to sell first. We want to first go to cash, and then we want to move to a short position. So let me show you that slide once again here right now. This is the market direction as it currently stands. We are in a confirmed market uptrend. So it's the kind of thing that you have to be careful about because you do not want to be shorting in a market like this when we're in a confirmed uptrend like this. It's too risky. Now you sometimes can do well if you do that, but you have to be extremely careful when you short in a market that is like that. So you've got to make sure. Get ready to short. The way it works is that when the market direction changes, this will go. And I will be broadcasting on the show. This will go to a yellow arrow that's going to be sideways, and then if the market does reverse, it's going to be a red arrow down. And when it's a red arrow down, that's when you want to short. So basically, as long as the arrow is up and we're in a confirmed market trend, you want to be basically 100 or more percent invest in the market. What do I mean by more than that? If you use margin, for instance, you would be more than that. As it moves to a is uptrend that is constrained with a yellow arrow, and I'll show you that on the broadcast here, then you want to start moving your positions to cash, and then when it adjusts, it'll be a red arrow down. That's when you want to start shorting the market. But right now, it is not time to short the market yet because it has not yet turned over. And that's very important that you keep that in mind because that can potentially be very good or very devastating depending on how you do that. So it's not I wouldn't be a short. I'm not a short right now. I'm not short in any of my positions, and I typically will come on with 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 that. I will indicate that whether it's time to be short or not. Right now, I'm long, and I just want to be very clear on that. This is right now a upward trending market. Is a question from the Philadelphia Flyers. I like the Flyers. Is AT&T a good buy right now? Have good dividends may go up in the future. Here's the problem with AT&T, and you're probably not going to you're probably not going to like what I'm going to tell you this. By the way, for lack of full in full disclosure, my brother was a salesman for AT&T for 10 years, so I know a little bit about the company. Here's the problem with AT&T. They are going to be rolling out the 5G network. I mean that is going to happen with AT&T. And that's the good part. The problem, though, with AT&T is the most indebted company in the world. And the problem with this is that if the reason that they have such high dividends is because those dividends are there pretty much for the sole purpose of keeping people in the stock. Because, unfortunately, because of the debt load, AT&T is not a growth stock. As a matter of fact, it's really never been a growth stock. And so I want to show you this chart. You see it's downward trending, even though it's moved up to the 40-day moving average, which is good. It's $30.49. This is not a stock you really want to own if you want to make money. Now, if you want a dividend, maybe. It does pay a very strong dividend, but there's just other places to go in the market for dividends. I would recommend, if you're looking for dividends and you're looking for growth, I think buy fewer shares of Microsoft. You're going to be happier that you did that. It's not that I'm against telephone. I'm not, but I just think that as a stock, as a stock play, I don't think you're going to be satisfied with the results of it. It's got very high debt, and I want to show you that because we're coming up into a period of time where we're in a deflationary economy somewhat in this country. It has a very high debt load, and that is a major problem. It's got an 82% debt load here, and the market cap is $216 billion. This is a heck of a lot of money. So that means that the equity in this company, unfortunately, is only about $50 billion. Now that sounds like a lot, but not for a company like AT&T. This is a very constrained on debt. If the market moves against this, if for instance, on the other side of this, we get inflation, guess what? A lot of the debt, some of the debt that AT&T has is variable, and they're going to be squeezed. So it was not. I would not recommend, at least right now, I would not recommend AT&T as a potential, as a potential stock. I got in at 30, thinking of selling it. I think you should sell. If it were me, and I was looking at telephone right now, AT&T. I just wouldn't be in it. I don't think it's going to go anywhere. I think you're better off with betting on the future rather than betting on the past. Not that AT&T doesn't have good technology. They're going to be big in the 5G, but the thing is, why bet on that? Why not buy a stock like Qorvo, QRVO, that's going to make the RF chips? They're going to go in every new iPhone that's coming out in September. Why not go there? I'm just saying, I think you can do a lot better than with telephone. So just my 2 cents. Okay. I bought a BA put, expiration July 17th. It's ready for the pullback. Your thoughts? I think you might be a winner there on that one, because I do think that once the reality, once the reality of of the situation that they're in becomes apparent with the lack of travel, I think we're looking at a pullback in Boeing. Now, can I say that for sure? No, absolutely not. I don't have a crystal ball, but I think that that's not necessarily a bad look. So let me take a quick look. Let's look at the BA chart here really quickly. See if I can bring that up. the Boeing chart BA. And BA is the largest component of the Dow Jones. And if you notice, the Dow Jones has been slightly lagging the other indexes. And part of the reason why is because of Boeing, unfortunately. Here's a chart of Boeing. I'm going to show you the weekly chart as opposed to the daily chart. The reason is you can see Boeing hasn't really recovered. I mean, everybody got very excited. It went down. This is the 23rd of March here. It bounced, but then it bounced down back to the line. It's moved a little bit above the 40-day moving average, but it looks like it's moving down. So I think it's a possibly very good put. I think you may have made a very good investment, because I do think it's going to possibly pull back. After hours is down a little bit, not much, at 180. You know, this stock in normal times, you know, this was a $320 stock just not that many months ago. So, you know, I think with air travel down, I think with the problems with the 737 MAX, you know, you might have a winner with a put there. So, you know, that's definitely something that is definitely a good thing. So I think that it sounds like you made a good investment. Splunk. I love this area. This is a really good area. Splunk, for those who you don't know, is a data analytics company, and data analytics, because of all of the connectivity that we have in the world today, is a major area of interest. And Splunk is quite an excellent one. These have a very good chart. I want to show you this chart. I think it's very worthwhile showing you what I consider a really good chart is. This is definitely one that you want to look at. So let me pull this up right now on the screen for you. There we go. Okay, Splunk. And here's the thing. This is the weekly chart that I'm showing you here. This was the March 23rd low. Every stock pretty much has this pattern down to the low. That's when the Fed started pumping money in the economy. It's moving up, but it's definitely going in the right direction. And here's something I want to show you. This is something that if you look on weekly charts, you can do this too. This is not very hard, but this is a very good thing that's happening here. You see, this is the 40-day moving average. It moved below the 200-day moving average here. Okay, but then it reversed course and it went up. So whenever it reverses course like this and it's above the 200-day, that is a very bullish sign. I think that Splunk is quite a good company, and I think that you know, definitely worth your time. It's a little bit, you know, it's 204, so a little bit pricey, but it has some very good legs. I think Splunk, it's not quite in a perfect pattern, but I think that it's an alternative. Now, of course, this is a much less expensive stock, but the chart pattern is, I think, stronger on Dropbox, and it does have a higher composite rating at 97. It's a lot cheaper stock at $22 as opposed to $200. Dropbox is one you might want to consider in the database group, but this is a very good group to be looking at. But I can't, you know, I can't say much bad about Splunk. So if you're in it, I think it's an excellent stock. It's an excellent stock. So let me see if I can do something on TikTok here. What happens to Tesla? I'm scared. Well, I think, you know, I think it's going to move up and down. I think, you know, potentially by the end of the year, it's about a $2,000 stock. Now, can I guarantee that? Absolutely not. But I do think that the market is moving in Tesla's direction. Hey, Jim, I was going to see you. Thank you, man. On 5G, okay, FIVG. Okay, so that's the ETF that tracks the 5G, and I think this is a great way to play the 5G revolution. And by the way, I think the time to get into that is now, because I think that there's going to be an uptick basically by September 21st. And how do I know? Why do I know the exact date? Well, one of the reasons I know this is because that is the date that Apple is going to come out with their new iPhone. And why is that so important? Well, the reason it's so important is because Apple currently has 5G phones right now, but they are not, you know, the reason that they're not out there is because the 5G networks haven't been built out. Sprint, AT&T, and Verizon are all building out their networks, and I believe that they will be ready. So This is a good time to be in the stock. I think it's moving, this ETF, I think it's going to move higher. Let me just show you the chart really quickly here. And this is the weekly chart on that. It's a relatively new ETF. Typically, anything that comes out, you want to wait about 3 months. And of course, that's here, 1, 2, 3. And then we're on into it. So this is quite, this has definitely got legs. The drawdown, all the stocks basically had this drawdown. This is March 23rd here, and then it's been up from there. And another very bullish sign on this is the 40-day moving average has crossed the 200-day moving average, and that indicates strong upward pressure and also very good blue bars here. That means that it have strong buying action on this. So at 27.52, this is a great way to play the 5G because you're not locked into any one stock. You're going to get the winners doing it this way. So this is a really good suggestion, and I thank you very, very much for this. And I think it's a good way to play 5G. 5G is, 5G is being hyped a lot, absolutely, but I do believe, it's going to be a big deal. I just can't see it not being. So, anyways, thoughts on Workhorse, WKHS. This is an interesting stock. Let's see, Workhorse, WKHS. Workhorse is a basically they make sub-assemblies for the automotive industry. It's down a little bit today. This is a tough sector to play in because there's potentially a lot of competition here. There is going to be increased emphasis on building product. Companies like Nikola, they don't have the ability to build it in-house, so they're going to have to go to companies like Workhorse, to companies that make sub-assemblies, bodies and chassis. So I do see that there is some potential here, but this is a relatively speculative chart. Look at how it moves up very, very, very drastically from 2 on up, and so I would be very careful with this one. It does have a good composite rating of 85. Typically on a speculative chart, you want to see at least an 80 if you're going to buy a more speculative. This is definitely speculative, but it is number 1 in the group. So this is an OEM auto truck part. Basically, they build chassis. So it does have it is particularly good. I wouldn't buy it right now. I would wait to see how it settled out. This is just really too early to buy Workhorse right now, just based on its chart. But it's definitely something you want to watch list. Okay, 5G. Gold is going up. Why is the market's Wall Street going up too? Good question. That is an excellent question. I'm going to show you the chart of GOLD, which is an ETF that basically I'm sorry, it's Barrick Gold. I want to show you the Barrick Gold chart because I think it's worth looking at, and it's up today. This is a better way to play gold rather than than buying it physical. Is to play it like this. So let me pull this chart up here really quick. There we go. This is Barrick Gold. This is probably one of the largest gold mining companies in the world. It is not number 1, as you can see. CMCL is. But it's moving quite nicely up. It's basically hugging the 40-day moving average. Why is gold going up, and why is the stock market going up? Well, basically there was all of this liquidity that was pushed into the market. It had to go somewhere. It's going into the stock market. But now that the liquidity is there, and the economy is starting to open up, they're realizing that a lot of the companies that they thought were going to be there aren't going to be there. Companies like the airlines, they just don't have the volume. So there's a fear that with all this extra liquidity, that there's going to be inflation, and I think that's a well-founded fear. That's what's pushing the price of gold up. So that's why the stock market and the price of gold is going up. Now, I don't think inflation is a problem right now, but if we see gold go above 1880, then I think that it may be on for gold. There's a number of great ways to play gold. This is Barrick Gold. This is the kind of the gold, for lack of a better saying, this is sort of the gold standard. But I want to show you other options in the gold market, and my favorite one really is Kirkland Lake Gold. It is a Canadian gold mining firm that operates primarily in Australia, and it has an excellent chart, and I just want to show you that really quickly. Now I'm going to show you the weekly chart on that because I think it's better to show the overall trend using the weekly rather than the daily chart. So let me bring that right up for you. If you're looking to make a play in gold, this might be something that would work for you. So let me go and put that up here. Now hopefully I'm going to, yep, we're going to get, there we go. I'm back rolling. We had a little bit of an internet glitch there. So let me pull that up for you right now. This is KL Kirkland Lakes Gold, and this is the weekly chart. It's moved above the two. Now, as you can see, when this drawdown happened, again, it drew down like everything else. It hasn't really come back to its $50 line, but it's getting very close. There's a gap up here that's very, very bullish. This is the weekly chart. I do think that we're going to start to see this make a new high at $47.55. It's up $5.87 today, or about 14%. It is also a New York Stock Exchange stock, even though it is Canadian. This is a good way to play gold. I think that you know, it's got a strong relative strength at 72. It's not as much as I'd like. I'd like to see a 90, but 72, I'll take it. It's also a 98 composite rating, and it's number 4 in the gold group. Currently, the number 1 gold-based company is CMCL, which is Caledonia Mining, and that is at $17. I don't really know this stock, it just came on, but it has, you know, it has a very nice chart. Again, I'm going to show you the weekly here. This is another potential option. Now, here's the problem with gold mining stocks. They typically follow at the trajectory. They basically follow the price of gold. Again, this one is a relatively inexpensive stock at $17.90. It's up 29 cents today, but it does have a composite rating of 99. So if you're going to want to be in the gold mining area, this is the way to go. Now, it did fall a little bit after hours, so be careful about these because gold mining stocks can be extremely volatile depending on, you know, what's happening with the gold market. So that's a way to go there. All right, so let's see. Buy Newmont Mining for a gold play. You know, Newmont is excellent. Newmont is one of the best in the industry, but I would caution you against going in one particular way. There is another option in gold mining called Franklin, Nevada, and basically they're not a gold miner, but what they are is they have positions in multiple gold miners, and FNV is the symbol on that. The reason I like Franklin, Nevada so much is because they are basically in a situation where they're collecting royalties, and I want to show you this. It's up very strongly, you know, and it does have a, you know, fairly good chart. I think the chart could be better, but it's you know, it's definitely there at 144.66. As you can see, I'm looking at the weekly chart here. It's regained, it's taken back the 40-day moving average, which I think is really important. And it's got a strong relative strength. It's also number 1 in the gold mining group, and that's one of the things I like to see is a lot of strength, and it's mainly because of its diversification. That's the reason that it has such a strong rating like that if you're wanting to go into the gold stocks. I'm currently not in any of the gold stocks, but if inflation kicks up, I will be moving in that direction. Currently, the 2 sectors of the market that I am concentrated in is the tech sector, of course, and healthcare. Those are the 2 areas that I am really concentrated in. So FSLY, what do you think? Well, okay, think long. Thanks for tuning in. I hope things are great there in beautiful sunny California. I wish I was there. FSLY. So let's look at FSLY real quick. Well, there we go. I got my should pull up here in a second. FSLY. There we go. Fastly. Oh yeah. Okay. You've been in the stock for a while. Okay, it's up. Wow, look at that. Strong. Okay, this is in clouds. This is in the cloud computing. Yeah, this is excellent. Long, you're a good stock picker. I definitely have seen some of the stuff that you're looking at. I would definitely be a buyer of this. 94 composite rating, up $8.65. I can't figure out why it's going up so much, but it definitely is a good chart. So, man, if if it's making new highs like this, hold on to it. Hold on to it until you start to see some weakness. Hold on to it. Now, if it does move up if it does move 20% more in less than about 8 weeks, you definitely want to hold on to it. If it takes about 8 weeks to go up more than 20%, then you want to consider possibly selling it and it's losing steam. But this doesn't look like it's losing steam at all. This looks like it's really powerful. It's up after hours about 49 cents. So that's pretty darn good. Thanks again. Well, I always appreciate your stuff. It's really good. Okay, hold or sell Vive. Well, currently I'm in Vive. I probably am going to be selling Vive just because I have a call that has been exceeded. I do think that I probably will be out of the stock. It's probably time to start looking potentially for an exit, but it may still have room to run. It's got a very strong chart that I'm going to bring up here. Yeah, it's up $7. Wow, that is just amazing. I hadn't looked at it. This is one of the stocks that I'm actually in, so I am definitely, it's definitely a good stock. I don't know if I would, if I didn't have to sell this one, I probably wouldn't right now, just because this is a strong chart, and especially in a weekly chart, and it just seems like it's moving ever higher at $7.45 up today, up 3%. So, when you have winners like this, you don't really want to sell them if you don't have to. And again, I'm holding Vive just for full disclosure. I have Vive. It's in my portfolio. And I think it's a pretty excellent stock right now. Okay, so on TikTok, let's see. How do you trade a market in a correction? Very good question. Here's how I trade a market in a correction. I wait. Don't move out in front of the market. If we're going to go into a correction, it will tell. So, and one of the things in every market day, I have my first slide is the market direction. If the market direction starts to change to a uptrend under pressure, you'll see that. When that starts to happen, that's when you start reducing your positions and going to cash. If it goes into a downturn, that's a red arrow down, and I will show you that just in a second, then you want to short, but it depends on the market direction. That's why the first thing you should do every day is look at, is the market in a confirmed uptrend? Now, if some of the indexes are down 1 or 2 days, that does not mean that it's not it's in a downtrend. It just means that there's a correction. If it's in a confirmed downtrend, you'll be able to see it on my show. And by the way, if you're on TikTok, who knows how much longer TikTok will be available in the United States. Of course, it was banned in India, and hopefully that doesn't happen here, but it might. If it does, all of my episodes for Dallas Trading Floor are on YouTube at youtube.com/Dallas Trading Floor if you want to see them. And by the way, if you want to sign up for the trade alerts, I have stock trade alerts. It's completely free. All you have to do is go to DallasTradingFloor.com and then just sign up for the subscription, and we'll send it right out to you as soon as we do it through the magic of email. So, also. I'm on Twitch at Twitch TV/Dallas Trading Floor. I'm also on Periscope, pscp.tv/Dallas Trading Floor. And I'm live on Facebook as well. So, and I may be coming to some other platforms, but again, if you're on TikTok, consider possibly bookmarking Dallas Trading Floor on YouTube, because there may be some interrupted service here. We don't know what's going to happen with that. But I'm always going to be on YouTube at youtube.com/Dallas Trading Floor. All right, well, it's almost an hour, and I thank you so much for tuning in. I really enjoy doing this, and I hope that you're getting some benefit out of it. One last question, Arnold. Thank you for this question. Is Alibaba ready for a pullback? Your thoughts? Boy, Alibaba is sort of a proxy for the Chinese market. I think it might be, but I wouldn't bet against Alibaba right now. I just wouldn't bet against it. And the reason I wouldn't bet against Alibaba is because the Chinese government is doing exactly what the American government did, and that is they're liquefying their stock market. They're propping up the shares in Hong Kong. So I don't think Alibaba is probably going to move downward because there's so much support from the Chinese government. So I probably would not. I don't think it's going to pull back. I really don't, at least not in the near-term future. But I thank you very, very much for the question. That's an excellent question, and I appreciate it. What do you think about a call calendar spread on Microsoft August time? Hard to say on Microsoft. Here's what I would do on Microsoft. I think that Microsoft is in a bullish chart pattern. I don't think it's going to pull back all that much. It did a little bit today. I actually sold Microsoft yesterday, but I needed the extra capital for some other positions that I had. I do think that maybe you want, around earnings time, you might want to do a bull call spread on that. I think that might that might be the way to go, and just up the number of contracts that you have. So let me just take a look and see when Microsoft reports. Let's just take a quick look. Oops. Here we go. Oop. Did I get that right? Okay. Microsoft. MSFT is the symbol for Microsoft. And Microsoft, and I think Microsoft is going to have, once again, another great quarter. I think that Satya Nadella has been a tremendous leader of the company. His results speak for themselves. Okay, basically earnings are due on the July 18th. So let me put that up on the screen here really quick, and then we'll get to that. Okay. Earnings are out on July 18th. If you want to do something really quick, you could put a bull call spread on that. I do think the earnings are going to be good, though, for Microsoft. I think they're going to be very good. Well, thank you, everyone, for tuning in. I really appreciate it. And again, TikTok may have some difficulty go off there, but I'm always going to be on YouTube at youtube.com/Dallas Trading Floor. So I will see you tomorrow at the same time at